This conference will now be recorded.
because this is the break-even year. Okay. Now, I want you all to do $1 million year. That's your attendance quiz. You got to do the same thing that I did. You got to complete a cash budget. We said in the $1 million year, the quantity was 125. Okay. The quantity is 125. So you got to go down here to this cash budget, and instead of 100,000, 125, and I worked the first quarter for you. So your job was to, number one, complete this cash budget. Then you got to make these entries for year two. You won't make this first one because that cash is already there, but you got to make the cash in sales, COGS in cash, administrative expense in cash. If you had a note, you got to do that. Then you got to close the books in year two. So this is year one. So you got to go and make these closing entries for year two. Okay. So let's begin. Any questions? So what I want you to do is we started on this, finish this cash budget for me. Finish the cash budget for year two. That's what I want you to do. Any questions? And when was this homework, this attendance quiz supposed to be due? When's it supposed to be due?
I thought we did this last week.
No. You did the one for break even. Well, I did the one for break even. You doing the one
But
for $1 million.
Yeah,
Yeah, I thought we did
I
the
did
break
the
no,
even.
it was. Remember, it was
profit
me.
one already.
We did
Well,
the.
do you all have it? Do you all have it done?
Yeah,
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 we
we
turned
I
it
mean,
in.
you turned
we
it
turned it in.
Yeah, I turned mine
All right.
in.
Well, what does it look like when you turn it in then? Tell me that.
in. So that's funny. But it was like 7.5 million for sales.
All right. Well, so let me go to my other sheet. We had that connection problem last time. So, all right. So we're in year two now. So we don't have this entry. You said the sales were how much?
7.5 million.
Your word for it. You then should have posted that to the ledger, and you should have had, as we go to the next year, 7,500,000 in here. On the wrong side. And so now cash in this next year has 7,500,000. Okay. What's going to be the case with cost of goods sold in the second year?
It was 6.5 million.
Let's see. Let me just see if I can. Where is the? Is this the one where I did the first quarter? So let's finish this. Let's finish this out then. So we had what happened in the second quarter? What were the total sales?
12,500.
How
But
many?
Professor, my bad. It's not 6.5 million. It was 2.5 million. That's me.
Yeah.
That's my fault.
All right, we'll come back to it. What were the sales in the second quarter?
12,500.
The
Oh, the quantity?
yeah.
Oh, the sales was 750,000.
Beginning cash coming up here still, what, 100,000? So what's our cash available?
850,000.
Well, the cost of the books.
250,000.
I get 250.
Multiplying 12,500 by 20.
All right. And we got $1 million here. So what's our total disbursements? Million what?
1,250,000.
So how we stand now on cash? We're short how much?
400,000.
We need a short-term loan or what?
500,000.
We get back to 100,000. Any questions? You all got this done. So what's our sales in the third quarter?
Total sales 750. The same thing.
Our beginning cash is still 100, correct?
Correct.
This is going to be the same, right?
Right.
And so our we're short. Let's see, this should be parentheses here. So we need a short-term loan of how much?
500,000.
And that's going to give us 100,000. Fourth quarter. What's the sales going to be?
4
4.5
million.
million.
Yeah.
What's our quantity?
75,000.
Total sales?
4.5 million.
Beginning cash?
100,000.
100,000.
So our cash available is what?
4.6
4.6
million.
million.
Well, the cost of the books?
1.5 million.
Rent?
$1 million.
Oh, disbursements?
2.5.
So how much excess cash do we have?
3 million.
2.1 million.
We had available 4,600,000. Our disbursements are 2,500,000. What is our excess cash? 2,100,000.
Yeah, I believe.
And we're gonna pay back these loans. And that's $1 million. Our ending cash balance is going to be what?
1.1 million.
Okay. Now, what's my income statement going to look like for year 2?
One 7.5 for sales minus cost of books sold is 2.5, and the expenses is 4 million. Then the total expense is 1 million, and then the net income is 1 million.
So why is the net income 1 million?
Because that's your profit, basically.
Why is that your profit?
Because we try to make $1 million in profit
Because
already.
you went up here and said that if I do this, if I sell 125, the profit's going to be $1 million.
Mm-hmm.
Now we making journal entries and we got to get the same result. What's my balance sheet going to look like?
Why you got wait for the total expense? Oh wait, never mind.
Since y'all got this done, what's the balance sheet going to look like?
For cash, we got 1.1 million, and that's your total assets. And then for common stock, we got 100,000 and retained earning as 1 million, making the total liabilities and equity 1.1 million.
You didn't retain earnings.
You said what?
How did you get $1 million in retained earnings?
Let me go check.
Where are those two accounts?
Ain't that's because of a target price?
Yeah, well,
Because in the journal entry for the closing entry, I mean for the closing entry, the journal entry is
start the year off.
huh?
You start the year off, you got 100,000.
Yeah.
Okay. Then we had sales of 7,500. What were those credits? When we
Hold on, let me look
credited
at it.
for what? The
Oh,
how much were the books when we bought them? Total. What did we say the books were? 2,500,000, right?
Right.
mm-hmm.
And the operating expenses of 4 million. So how much we got in cash now?
1 million.
You do that. How
In
much
my
you
IT
got in
account,
cash?
I got 1 million.
How much we got in cash?
I have 1 million.
1.4.
Didn't y'all have a balance sheet with 1,100,000?
Yeah,
So how much has to be in this account?
$1
1
million.
million 100,000.
Well, you did have 100,000 in the bank when you started.
Yeah.
You got 1,100,000 in there, okay?
I forgot to add the 100,000.
Can't be
Yeah.
forgetting that. Now, retained earnings is 0. But y'all told me retained earnings was 1 million. So how did you get this account to be
When
$1
I
million?
when we went over this last week, when I had asked you the journal entry, you was like, "Yeah, the journal entry was 1 million." So that's why what made me put it in the retaining earnings.
Wait a minute. what what journal entry was 1 million?
The closing entry when you said okay, because you had an extra one. You had income summary, you debited it, and then you credit retained earnings. And when I had asked you, I was like, wouldn't it be 1 million for the income summary and the retaining earnings when we went over it last Wednesday? And you was like, yeah.
All right, so we had these entries, we had the 4 million, and of course this washes out, so we won't worry about that out. We had different amounts. I'll just cut them from now. Let's go to closing entries. When we get to year 2, we're gonna debit what sales for how much?
7.5.
And we're gonna credit what? This is a credit the income summary, right? Closing entry 1. What's closing entry 2?
Cost of
Income
goods
summary.
sold.
Yeah.
So we're gonna do these
You gotta
same
go ahead.
things. Copy. What's our amounts gonna be?
6.5 million. The cost of books sold is 2.5, and then the admin expense is 4 mil.
Okay, so if I go to my T accounts now, I got 7.5 here. So if I get in the income summary, I have a credit in here, what? For this the next year. What are my debits in income summary? Uh, 65, 4 million, 16. What was the total sales? 7.
7.5.
Then the cost of the books sold, in this case, it was what? 2,500,000, correct?
Yes.
And the administrative expenses were what? 4 million again.
Yes.
When we close them out, we're gonna credit these accounts 2 million. So this is what I expect to see in your T accounts. So therefore, I would have a debit in that closing entry of what? 6,500,000. So now I need closing entry 3, right? And what's closing entry 3 gonna be?
Income summary of debit income summary of 1 million and credit retained earnings to 1 million.
That's correct. So we're gonna debit income summary. We're gonna credit retained earnings. another 1 million. So when we post this entry, we debit the income summary, and we now credit retained earnings for 1 million. So that's how you get the million in retained earnings. Then when you prepare the balance sheet, after you've had all the closing entries, that's how we get these numbers. And on your project, you're going to have to do that. And because your project is going over these years, you have to use the numbers in the prior year. So you can see we had to use the beginning balance. So the years don't hang separate, okay? They do not hang separate. Are there any questions? Okay, so let's get ready to go back into our master budget. And we were buying something, all of this would work out. And we would do this and we'd be done. But we making something, okay? When we make something and we get ready to prepare this cash budget, we have sub schedules up here that we prepare and pull off numbers to come into the cash budget. So we have a sales budget, production budget, direct materials, direct labor, manufacturing overhead, selling and administrative expense. And we pull numbers off of that to get to the cash budget. And then we're also going to pull numbers off of that to make journal entries so we can get a budgeted balance sheet, beginning and end of the period. So we're moving to what you're going to have to do on the project. So you're making something on the project. And so you'll see in those, there are 8 operating budgets that have to be prepared for each year. So for losing 100,000, set of operating budget. Break even, a set of operating budgets. Make $1 million, a set of operating budgets. And then a cash budget, an income statement, and a balance sheet for each year. So everybody is doing this. Everybody is doing it. Now I have in here the information laid out exactly on what you need to do for each operating budget. And we're going to work on sales today, and we'll come back to it in a few minutes. But we got to determine what are the sales and cash receipts and et cetera, because we got credit sales now. We got to determine those total units using that CVP formula. That's why, I got you doing that, because if you make a mistake here, everything in the whole process will be wrong. You got to put in the sales projections, the sales by quantity, that predetermined selling price, calculate total sales by quarter. You got to put a bad debt percentage in there now, a collection percentage, total quarterly collections. Then for those quarterly amounts, you transferring those to the cash budget and making a journal entry. So right now, everybody's, you'll be concentrating today and Wednesday on just this budget. The other ones were in there. They're not as difficult. We'll get to those later. You just got to do the sales budget today. That's all we're doing is the sales budget. Got to do this for each one. Okay. So we got an in-class problem that we're going to work on, okay? And the assumptions that you see here, you can utilize these assumptions uh, as you go through with your project. You see we have the quarterly sales percent, selling price, credit sales, bad debt collections, quarter sale, quarter after sale. We have inventory items for the ink and the paper, purchases, how we're paying them off, direct labor, manufacturing overhead, depreciation, 20% sales paid quarterly, administrative expense, quarterly depreciation. And we have an initial cash balance of 200,000. So that's what we're doing the project, and the minimum cash required is 100. So you can work with these assumptions. And in this problem, we got interest and principal. Now, the first thing we got to do, and we're just going to do the break-even year. Then we're going to come to the sales budget. But you can't get to the sales budget until you calculate it, and we're doing break-even. We got to fill out this chart, which is the same thing on the Excel spreadsheet. So we got to reach into our assumptions and say, what do I need to utilize in these assumptions so I can calculate sales and everything. And to get our selling price, we need an SP multiple. We need a number for that. I think we want to use 5 in this problem. Okay, so now we got to go in here, and I got this little break-even column. We got to look at the ink. There are 5 ink cartridges at 10 each. So the ink is going to be $50. So we're just bringing over here items that going to help us determine break even. Paper, we got 7 rings at $7 each. That's $49. Then we're going to go down to the direct labor. 20 books paid, 20 books per hour, $20 an hour. How much is that going to be? Pray tell.
Should be one, right?
Should be 1. Okay. So if we go to wrong way. This is where I want to be. And so we said the selling price multiple was 5. Okay. The ink we said was what? 50. The paper, 49. The labor, 1. And so the product variable cost was what? 100. If the selling price multiple is 5, our selling price is going to be what? 500, hopefully. The bad debts are always 10%. and the selling expenses are 20%. So I'm working on Word, but you should be working with part two of the project. So 10% of 50 is what? That's 50. 20% is 100. So our total variable cost, 100, 50, and 100 is going to be 250. Our contribution margin is 250. So it wasn't that we had one book and that was it. Now we got all of these assumptions. So all of these items, we simply had a little break even column over here, and that's going to be the same all the way through. Our selling price multiple was 5, so that's how we get the 500. But 50 was the ink in our assumption, 49 was the paper, 1 was the labor. And so that gives us 250, so our contribution margin is 250. We need now to pull in the fixed costs. And our fixed costs are always manufacturing overhead, administrative expense, and interest expense. So we go to manufacturing overhead, quarterly, 25, 25, 25, 25. So that's going to be 100,000. So you always got to get the overhead 100,000. The administrative expenses 50, 50, 50, and 50. And so that's going to be what? 200,000. Then we need the interest 25, 25, 25, and 25. It's 100,000. We got 100, 200, and 100. Our total fixed cost is 400,000. Are there any questions so far? Well, give me a break-even quantity then. Do I have a C student who can give me a break-even quantity?
1600.
I got a AB student with a 1600. How do we get 1600?
All I did was divide 400,000 by 250.
So what we did here, you got to do this on your project. So team 3, you all were in talking about this information and laying it out. You got to lay it out like this to come up with your quantity. So 1600 is the quantity. So once we get 1600, we put it right here. So what did we do? We went through, pulled out the items that related to calculating break-even quantity. We went through and we calculated the break-even quantity. And we brought it to our sales budget as the quantity. Any questions? Now we need to bring those sales percents down. And in this particular case, it's 10%, 20%, 30, 40, and 100%.
So fucking weird.
So we just brought those down from our assumptions.
Weird.
So you have to have these assumptions on this demonstration problem. We got these assumptions. Any questions? Drop down. Now, can you calculate the sales quantity by quarter?
It's 160.
First one's what?
160.
Second one,
320.
320.
third one,
480.
four what? 480.
480.
And the final one,
640.
640.
our selling price is what? 500, correct? So now I need the total sales by quarter.
First one 80,000. Second one is 160. 160,000.
The third one is 240,000. The last one is 320,000.
We add them all up, how much is it? Maybe 800,000?
Yeah, 800.
And all of these sales are on credit, correct? So no longer any cash sales, credit sales. And that JE means you're gonna make a journal entry eventually. Okay. Now, when you sell things on credit, everybody just don't pay. So we're assuming 10% of the people won't pay. So when we get ready to get to our collections, in the first quarter, 8,000 is not going to be collected. These people will never pay. Second quarter is going to be what? 16,000. Third quarter, 24,000. You will never collect this money. So we're trying to get to our cash receipts, and then 32,000. So 80,000 won't be collected. Let me see if I can. Okay. You come to TSU in the fall, well, this spring. You came in this spring and you got a bill in January. And let's assume that bill was $5,000. Is that a good number for what your bill was in January?
Yeah.
All right. So that's when the charge came. But when you got ready to pay, you paid some in January. You got some delayed to February. You got some delayed to March. And let's just assume you paid 50% in January, you paid 25% in March, and you paid 25% in April too. So how much of the 5,000 does the university get in January? How much did you?
2,500.
Yeah, pay 2,500, right?
Mm-hmm.
And on your first installment, you pay what?
1,250.
250, but that was in February, right? And then you finished up in March. Let's just assume it worked this way. Does everyone see that? You had a bill of 5,000, but you only paid half of it in January. Then you paid 1,250 in February and 1,250 in March. So the university, they had a 5,000 sale in January, but they only collected 2,500. They had to wait till later months to collect the rest of it. So just keep that in the back of your head, a little bit. And when we collect in our business, we collect 40% in the quarter sale, 50% the quarter after sale. 10% we don't collect. We collect 40% in the quarter sale, 50% in the first quarter after sale. So collections in the quarter sale, we had sales of how much? 80,000. How much of this money are we gonna get in that first quarter?
40%.
32,000.
2,000. Not gonna get any of this. This will be zero. And so in the first quarter now, when we got credit sales, even though we had sales of $80,000, we only collected $32,000. Let's go to the second quarter. We sold 160,000. How much of that are we going to collect?
64,000.
64,000. Then we're gonna go to the prior quarter and we're gonna get what? Half of these. And so our total collection is gonna be what? 104. 40% of the current sales, 60% of the prior sales. So we slide them across. Let's go to the third quarter. If the sales are 240, how much we gonna collect?
Wait, how'd you get the 40?
I took uh 50% of the sales in the prior quarter. You know, like you didn't pay, you only paid 32, then you
And you
wait
got
a
that from the 80,000?
got to go back to the first quarter.
Uh-huh. Okay,
Holy
I
shit.
got you.
Come
Thank
here, baby. Are you laying down?
Okay.
Okay, I'm coming.
So let's go to the third quarter. Our sales of 240. How much of this are we collecting?
96,000.
Then we can go collect how much of the prior quarter sales?
Should be 80,000, right?
80,000, 50%. So our total collections are what? 80 and 96 is going to be what? 176.
166.
166.
In our final quarter, we're collecting how much of the 320
100,
sales? How much?
128,000.
Take your word for it. Plus we're collecting what? 50% of the prior quarter, 120. We add those two numbers together and we get what? 248, right?
Yeah.
So what are our total collections are going to be? Now, our total sales were 800,000. If we add these numbers together, what are our total collections?
320,000.
Take your word for it. You sold 800, 80,000 you're not going to collect, and then 320 is all you collecting. So this is the sales journal. These are our collections.
Wait, hold on. My 320 came from the collections of the 40%. I thought that's what you're asking.
Saying it's wrong?
Yeah, probably.
560,
The
right?
total collections is 560,000.
Yeah.
So this should be 560.
Yes.
Yeah.
My
Everything
bad.
else correct?
Yes.
Yeah.
So these are my collections, okay? So this is that cash budget we were working on before. Okay. And we said we began with how much? The assumption was what, 200,000, right? And so our cash available in the first quarter is 232,000. What we'll be doing next time will be, okay, what are the disbursements? We got to pull the disbursements off of all of those tables, quarter by quarter. Okay. So you will expect to be able to do a cash budget 1 week from today. You'll be expected to be able to do a cash budget 1 week for the day. Now, these cash budgets are going to differ. One is going to be based on a target loss of 100,000. break even, 1 million, 2 million, 3 million. So everybody on your team will have a sales budget based on a specified quantity. And so
Can
since you're
you
coming off your project, you might need your project done with those numbers and correct, because 1 week from today, there's going to be a sales budget quiz. Sales budget only. Now, the other thing we have to do is make journal entries. So we're doing the same thing. Here's cash budget. We got the collections. We just got more than one. We had 2 disbursements before. Now we got a whole bunch of disbursements. We're going to add them up, see what the excess cash is. Same thing. More than 2 expenses now. Okay. We still got to make journal entries. So you'll be expected to be able to make these journal entries. We started the company with cash of 200,000 because eventually you got to prepare for financial statements. You're going to have about 13 journal entries. It's all got to tie together. So that's the initial cash we put in. Okay. The sales, so that JE 800,000 credit sale. That's how we get that. Then the bad debt expense, we said it was 10%, 80,000. Account receivable. What's this number going to be, you think? How much cash did we collect? We said we collected 560, didn't we? We have 560 over there. When we come up here, we have 560. So you see here on this last column, it's got journal entry plus cash budget. So the cash budget amounts are going to be coming from the last line, but we got to make this journal entry to collect also. In cost of goods sold and finished goods inventory, whenever you sell something, you got to take it out of cost of goods sold and inventory. Now, if you remember, we're doing a direct costing income statement. When we do a direct costing income statement, we're going to use the product CVP to cost the item. Ink, paper, and labor, no overhead. Product CVP. So this is why we've been doing that calculation. And so since the quantity sold was 1,600, we're going to multiply the quantity sold, 1,600, times the product variable cost, 100. We get 160,000. A week from today, you'll be doing this, but you're giving me the numbers off of your product. Everybody's doing this table but they're going to be doing it for a different quantity based on the assignment made by the team leader. So in all cases, typically the team leader is doing the target loss. Then we have the break-even person. Then we have the target profit, and we keep going. Target profit 2 million, target profit 3 million. So team leaders, you need these assignments for next class period. Any questions?
It's for this, like this specific worksheet or the project?
It's for the project. See, we've worked this one out, and what we're doing on the project, you got to do everything we're doing now. So everything we did today, we got these assumptions. We went through and made the calculations. Remember, you got to do quantity calculations all the way across. Target loss, break even, target profit, million, 2 million, 3 million, depending on how many people in your group. Then for each one of those assumptions, there's going to be a number that comes in here. So, just testing, if this was target profit of 1 million, what would this number be? If the target profit was 1 million, what would the quantity be? If the target profit was 1 million, what would my quantity be?
5,600.
All right. And what about target loss of 100,000? What would my quantity be?
1,200.
So if this was team 3 and if this were their numbers, somebody would be doing the sales budget with 1,200, somebody with 1,600, and somebody with 5,600. Okay. So they will be doing the sales budget and those journal entries. Are we clear?
Yes, sir. Can you post this video later so we can have it to look back on, please?
Well, send me $100. I will. Put it in my cash app.
I don't got it.
Okay. So where do we go from here? We're going to finish this problem next time. Finishing the problem means we got to do the production budget, raw materials ink, raw materials paper, direct labor, manufacturing overhead, selling expenses, administrative expenses, capital expenditures, then finish the cash budget. And we have to do journal entries for each. And so what you've got to do is to go through, and we'll be doing it, but we did sales. We did everything on here. I got it laid out. You just got to read it and do it. Okay. So probably what I want you, let's work on this production budget. Uh, so team 3, you all will work on the production budget. Team 1, you do raw materials payments. and team 2, you can do direct labor. Team 1, y'all can do raw materials and paper, and team 2, you all do the direct labor. So you read, you see what it tells you to do, and you go do it. Now, when we get ready to go to the cash budget, the production budget, I'll show you something. I'm going to copy these numbers. Then on the production budget, that's the first line of production budget. It's also first line of the raw materials ink budget. It's also the first line of the raw materials paper budget. And it's first line of the direct labor budget. So what's going to happen to your project if that number is wrong? What do you see happen to your project if your quantity is wrong? And
Everything's
so
wrong.
there, say what?
And the answer's
All of those answers are going to be wrong. So that's why if you messed up, I made you work 100. Because, that was a quiz. Let's see. But now it's kind of like no catching up anymore. Like redos, that was, we got to work hard over this next week. So what we're going to do next class period, we're going to finish up all of these budgets and make the journal entries. Okay, we're going to finish these budgets and make the journal entry. Then your assignment will be and we'll get the cash budget done too. So we'll get all of this done. But your assignment is going to be to prepare the balance sheet and the income statement. So we have all the journal entries done. You got to prepare the income statement and the balance sheet and the closing entries. So that's why, I went back and looked over that small, simple problem because you now got to do the same thing, but it's in there's more involved. Got it?
But next week you want us to have this ready for our group project.
Yeah, you're only doing the sales budget
Oh, okay.
a week from today. Now we're going to go back and review the sales again on next class period. We'll review it, make sure you understand it. Then we'll go through the remainder of those budgets. And we will finish the cash budget in this in-class example. Then on next class period, on a week from today, you got two things you're doing. The team is preparing me the balance sheet and income statement for this in-class problem. Then you have an in-class quiz on the sales budget. Everybody on the team using the numbers that you submitted to me on the project part 2. So you got to get your project part 2 done because now we're beginning to work where everybody is working on something of their own with their own numbers. Everybody got a year, and so you'll be tested year by year, but you'll be tested on the project year by year with everybody assigned a year. So everybody needs to be assigned a year. I need to know who that is. Is that clear?
yeah.
Yes. Also, can you go back to the production budget? I wanted to see what the first line was again.
The first line on the direct labor budget, on the raw materials paper budget, wait a minute. I got ahead of myself on that. This is just the production budget. So let me, okay, so moving on as we make up for all of that lost time we had, we're going to start on the production budget and do the first quarter. So team 3 will be ready to roll. So team 3, you start off with the sales. Then your desired ending inventory. When you make something, you not only have to make what you're going to sell, but you got to make some part of the next quarter. So we go into our assumptions. 50% of next should be quarter sale. So you want to not only make 160 because you're selling 160, but you want to make 50% of this 320. So we're going to take 50% of 320, and that's going to be what, 160? So you got to produce 160 plus 160 or 320 in the first quarter. You don't have any beginning inventory because we just started. So 320 is a total that has to be produced. Actually happens is the 320, this number here. So team 3 needs to get it done because we're going to copy it. And that's the units produced is what goes here. Here, it's going to go here. So team 2, we're going to go ahead and do a little bit on the first quarter, on the second quarter. So you know you got to make 320. That's what you're gonna sell. But you also got to make half of these. So your desired ending inventory is 240, but you're selling plus half of what you're gonna sell next quarter. You got to have inventory going into that quarter. So we add those together, that becomes what? 560. 560. Beginning inventory. The desired inventory from before becomes our beginning inventory in the next quarter. So we bring this over here. So we only got to make 400, even though we need to make 560. We have 160 left over. So the 400 is going to go here. 400 is going to go here. 400 is going to go here. 400. Now, there are no dollars on the production budget. There are no dollars. Let's see if we can look at raw materials, ink. and we go into our per unit requirements on ink. It was 5 ink cartridges at $10 each, okay? 5 ink cartridges at $10 each. Per unit requirement 5, and the unit cost is 10. So we got to make 320, and the per unit requirement is 5. We need in total what? 320 times 5. So how much is that? That's 1,600.
Yeah, 1600.
Yeah.
We need 1,600 ink cartridges. They're costing $10 each. And so if they're costing $10 each, we need to buy 16,000, okay? Payment in the month of purchase, payment in the following month. In the month of purchase, a quarter of purchase, we pay 75%. And then the quarter after purchase, we pay 25%. So we got to pay 75% of this. So 75% of 16,000 is what? 12,000? So the total payment is 12,000. So then we're going to take the 12,000 and that's going to come here as the first payment. It's going to be on the cash budget. So that's the first quarter. Let's see if we can do the first quarter of labor before we finish. With the labor, the workers could make 20 books per hour and they were paid $20 an hour. So the per unit requirement is 20. They could make 20 books an hour, but if they can make 20 in an hour, how many hours will they need to make all of them? Probably 16 hours.
Yeah, 16.
The labor rate is 20. They're going to work 16 hours. We're going to pay them $20 an hour. It's 320. What we're going to do with the 320? The labor in the first quarter is 320. We're going to go through those schedules. We'll probably just do the first quarter as we start off next time and get the total first quarter, total payments, and see whether we need to borrow any money or not. Okay? So it's more detail how we do it now. This is exactly what you got to do with your project. This is exactly. Any questions? Okay, so I will get this video up. Do as much as you can on the in-class problem. So team 3 has the production budget. Team 1 has the raw materials budget, ink and paper. And team 2 has the labor budget. Work very hard to see if you can finish those. But we're going to go over them next time. I'm just assigning them so you could concentrate on something. The handout has everything you need to do, tell you everything you need to do. And, once upon a time, it wasn't a handout, and we were doing the project. Once upon a time, it wasn't these tables in Excel, and we did the project. But prior students said, Dr. Boyd, we want to make it easy on the people who come behind us. So write up this handout so they'll have it. And then do the Excel table so they'll have it. And then it won't take them long to do it, Dr. Boyd. It won't take them 100 hours like it used to take us. Okay?